In this video, I want to go through all the key 2026 tax numbers that every Canadian needs to know as they head into the new year. We'll cover RRSP and TFSA contributions, CPP, old age security clawbacks, and much, much more. So let's jump into it. First off is RRSP contributions for 2026, which jumped to $33,810. That's up from $32,490 last year in 2025. Now again, you can contribute a maximum of 18% of your income. So if you make $100,000, $18,000 would be the maximum you can contribute to your RRSP. But again, if you have a very high income, the most you can contribute, if it goes up to 18%, is $33,810. And again, as you accumulate RRSP room, if you don't use it, it does grow over time. We meet many people with hundreds of thousands of contribution room. So remember, this is a growing number over time if you have an employment income. So again, 18% to the maximum, $33,810. Now remember, if you're someone with a defined benefit pension plan, you have something called a pension adjustment. And a pension adjustment is calculated by the amount that we're putting into your defined benefit pension plan. So you make a contribution and your employer does as well, but there's something called the pension adjustment, and this will reduce the amount that you can put into your RRSP. So just make sure you understand, if you have a defined benefit pension plan and you make $100,000 a year, you can't put $18,000 into your RRSP because a lot of that, in fact, most of it will be depleted by your pension adjustment. So again, if you make $100,000, 18%, but you need to take off your pension adjustment first. So just make sure you understand that if you have a defined benefit pension plan. The TFSA, the tax-free savings account limit for 2026, stays the same at $7,000. So on January 1st, you get $7,000 of more contribution room that you can put in. Lifetime now is $109,000. So if you were at least 18 years old in 2009 when the tax-free savings account was introduced, and you were here in Canada, and you've been in Canada the whole time, then your lifetime maximum is $109,000. So if you've never used a TFSA and you were 18 back in 2009, and you think, well, this actually does make sense to use, you can put $109,000 in it now. Now remember, on January 1st, you also get any contribution room that you've taken out in 2025. So if you took out by, say, $20,000 in 2025, you'll get that $20,000 back on January 1st, plus the new contribution room of $7,000. So remember, when you take money out of your tax-free savings account, you get that contribution room back, but not till the following calendar year, which is really important to understand. And remember, if you have unused contribution room, that can be used as well. So let's say in 2025, you walk through the whole year with $10,000 of unused contribution room. You also took out $20,000 of your TFSA. So you had $10,000 you didn't use, plus you've taken out $20,000. January 1st, 2026, you'd have your $10,000 carry forward. You'd have $20,000 that you took out that you now get back, and the $7,000. So you could put a total of $37,000 into your tax-free savings account. YMPE, or maximum pensionable earnings, and this is a really important number because this is how much a percentage, and I'll talk about that here in a second, but how much you actually contribute to your Canadian pension plan. So in 2026, it's jumping up to $74,600. This is up from $71,300 in 2025. Now again, you make contributions on your income up to that threshold. The contribution limit stays the same at 5.95% of your income up to that number. Now remember, if you're self-employed, it's double that. If you're not self-employed, your employer is paying 5.95%. So if we take the maximum pensionable earnings of $74,600, the most you can pay in as the employee, if you've hit that threshold, is $4,230.45 here in 2026. So it's up a little bit. Now, there's also CPP 2.0, and this is for income between $74,600 all the way up to $85,000. So if you fall into that gap, if you make $85,000 or more, you're going to pay into CPP and CPP 2.0. Now remember, I won't cover all that in this video, but this is an added CPP payment that will give you more down the road. You're not paying into it to fund other people's retirement. This is for you, more money down the road. Now CPP 2.0, it's a bit of a different calculation. Instead of the 5.95%, it's 4%, and it's 4% just on that small amount. So the most that you can pay in if you make $85,000 or more in 2026 will be $416. And again, your employer will pay that same amount. So if you're self-employed, you're looking at $832 for total payment into CPP 2.0. Next up is the First Home Savings Account. Now, if you haven't looked into this, you need to take a minute and dive into the First Home Savings Account. And I get it, a lot of our viewers are older, but maybe you have kids or grandkids or nieces or nephews or families or friends, somebody in your world I can guarantee could take advantage of the First Home Savings Account. Now, I won't go into all the details in this video. There's lots of information out there, but the maximum remains unchanged, which is $8,000 in 2026. So that's a contribution room you get if you have an account open. That is really important. You only start getting contribution room once you've opened up an account. So if you're planning on buying a house in 2026 and you're still watching this video here in 2025, I would recommend to open up an account now before the end of the year, because come January, you'll get $8,000 new contribution room plus $8,000 for 2025. So you could actually put in $16,000 and take advantage of the First Home Savings Account in a greater magnitude, which could really help out for taxes, deposit on your house, etc., down the road. Now, there is a lifetime maximum. So a few maximums here. Lifetime maximum is $40,000. That is the most you can put in. So essentially, once you set up the account, you could put 5 years of contributions at $8,000. You've now maxed out the account. The other key data point here is you can only carry forward $8,000 a year. So if you've opened up the account for a few years and never contributed, only $8,000 goes forward every year. So if I open it up, say 2 years ago, come 2026, I don't get all that contribution room carry forward. I only get $8,000 from 2025. The rest of it is I have to keep working on it to accumulate that year over year going forward. So lifetime maximum $40,000. Maximum carry forward every year is $8,000. We'll put a link below to an article that covers all of this data in more detail, but I want to highlight a few key data points on top of what I've already mentioned that might impact you going into 2026 around taxes and how you want to structure your financial planning or your retirement planning. Prescribed rate loans currently are at 3%. They will stay at 3% heading into 2026. And this is really important. If you're kind of lopsided on assets, we have one spouse, loaning to the other, the current rate is 3%. So keep that in mind as you do your financial planning, retirement planning. See if a loan, prescribed rate loan makes sense. You're looking at a 3% rate. Your lifetime capital gains exemption. 2025 is $1.25 million. In 2026, it jumps to $1.275 million. So a little bit of a bump on the lifetime capital gains exemption. Now, remember with the lifetime capital gains exemption, it's based on a percentage. So if you've used 90% of your available room, then it's going to be 10% of the current amount. So it does continue to grow even if you've used some of it. And again, if you have questions about, do I have more lifetime capital gains? How do I use it? Can I use it? Talk to your tax accountant. They can explain this, especially if you've used it. They will know how to access how much you have left going forward. Another thing that affects almost all of us is your basic personal amount. So in 2026 is jumping to $16,452. And this is for income of $181,000 or less. It does scale down a little bit if you make above that 181 threshold. But for the majority of us, we're going to get that basic personal amount again at $16,452 in 2026. And the last one I want to highlight here, and again, the link below to many more, but it's the old age security recovery threshold, or the OAS clawback as we like to call it. So in 2025, the clawback threshold was $93,454. In 2026, we get a bit of a bump, $95,323. So if you're collecting old age security, and your income's above that threshold here in 2026, again, $95,323, you will be clawed back 15 cents on every dollar above that threshold. So again, some of you might be in that threshold and it just is what it is. But for a lot of you, there's a lot of tax planning to be done. So if you are running into an old age security clawback, you think you can maybe avoid it, create a bit of a better tax situation, reach out to our office. We'd love to help you build out a retirement plan, put more of your money back in your pocket. You worked so hard for so many years to get to this point in life. So if you need help with a retirement plan, reach out to our office. You can learn more at parallelwealth.com/planning. We have all of the information on our website. Different plan options, the costs, sample plans, all the details there. So you can dig into our website. There's a chat bot. You can ask it questions. Everything's there. There's also a place to book a call with us if you have more questions. So thanks for joining us in this video. If you haven't checked out our weekly podcast, Every Saturday morning, we have a brand new podcast answering your questions on retirement planning. So check that out as well. We'll see you in the next video.